going to start with the potential for the debt ceiling crisis, the possible for the government shutdown. We're going to then talk about the major market indices and some of the momentum stocks that we've all come to know and love and loathe, and yeah, so on and so forth. So there's a good amount of stuff to say on all of this, but let me start off first and foremost. This version of the video is public. Their version with the charts are for my subscribers. So when we get into the stocks, it'll be like a weekend review 2.0. And you can see that on my subscription channel. The link to that is in my Twitter handle. It's @JustinPulitzer. So there will be a rebroadcast of this a little bit later on after I finish the video, and then that will be up on the subscription website. I've been getting a lot of positive feedback about this format, about doing it both ways. Some people like the immediate version. It takes a little time usually to prepare the charts. I guess I could start just doing the charts on the fly, but I find that the interactive is pretty good. So the public, Mitch McConnell, the media, a lot of people have been talking lately about the potential for a government shutdown, and I'm going to talk a little bit about what that means, and then also the debt ceiling. And I think that there's a lot of ambiguity surrounding both. First and foremost, I did a survey. I had said what percentage of the government actually shuts down when there is a government shutdown. The options were 6%, 17%, 38%, and 61.8%. I threw that in there as a little bit of a trick question. 52% said 6%, 17% said 20%, 38%, 11% said 38%, and then 17% thought 61.8%. The correct answer, according to Paul Ryan, the Speaker of the House, is 17%. So that is what the government shuts down. The essentials of the government, the military, the intelligence services, so on and so forth, they don't get shut down. There's actually a statute that keeps those branches of government open. They don't close. So it's very minor stuff that closes, and I think this is way overblown what the government shutdown means. And then when it gets reopened, people usually get back pay and so on and so forth anyway. So way over proportion. Now, as far as the debt ceiling goes, now this is where it starts getting a little bit more tricky. We're told that if we breach the debt ceiling, we go into default, correct? That's what the media tells us. This is a load of nonsense. The debt ceiling, first and foremost, what they talk about, it's always for future spending. They never want to stop spending. Our government on both sides, both Democrats and Republicans, they are like drunken sailors with the people's money, and they just want to spend, spend, spend. If the debt ceiling was reached and not raised, and I'm sure it will be after some angst, and I will say that I've mentioned before that we are in a very polarized time. President Trump has said he wants to have allocations for his border wall put into the budget as part of as a rider. And assuming the both parties think that a government shutdown would hurt the other party, so they like to play games. So this is a whole misnomer. First of all, if there is a government shutdown, we still pay taxes. It's still collected. The government still is functioning. They're still getting revenue in, whether or not we go over the debt ceiling or not. We spend about $4 trillion a year. We take in about 3.5-ish. So there's that deficit there in terms of what we take in and what we spend. And that's why they need the increase, so that they could keep spending on that marginal difference. And if it weren't to be increased, there's still plenty of money in there to run the government, and they would just have to start prioritizing. So let's go through a few of the misnomers. One is that the debt will not be paid. If you pull up the 14th Amendment, and I'm going to do that right now, the validity, this is Section 4 of the Constitution. This was all part of the, this is post-Civil War Act. The validity of the public debt of the United States authorized by law, including debts incurred for payment of pensions and bounties for services in suppressing insurrections or rebellion, shall not be questioned. Shall not be questioned means it gets paid. It's in the Constitution that the debt, meaning the interest and principal, is paid. So this is a total load of nonsense that we're fed on a daily basis, that we are going to have a default on our debt. Totally irresponsible, and it's used as a way to get this increase. The debt ceiling just forever increases, right? And they never have to make the hard choices. They never have to balance the budget. They can just spend and spend and spend. It is unbelievable what is allowed to go on here. So what would happen? They'd have to start prioritizing. They'd have to start cutting out all the pork and all these ridiculous programs that they spend so much money on, and maybe start efficiently running the government. Imagine if you made $30,000 a year and you spent 40 every year. How long do you think that would be sustainable for? Because we have the power of taxation and the basically unlimited ability to borrow here, our answer, I believe, is going to be into the 2040s, possibly. That's roughly when it's estimated that we're going to get to like over 150% of GDP, spending to GDP. So we're going to have to start making, oh, by the way, Social Security checks, that's the other one that gets everyone all scared, that Social Security checks are not going to come out. Congress has already authorized that gets paid. So this is a total misnomer, just so you know. That does not mean that the market isn't going to have a freak out, because you and I now know this, but the schmoes on television who like to boost ratings and promote fear can get you very nervous. But this isn't going to lead to any type of financial crisis or Armageddon. It is totally manufactured and man-made here. However, if this isn't addressed sometime in the next, well, I've just told you, in roughly around 30 years, we are going to have a big problem, because we will not have enough money coming in to pay the debt. Now it's a small difference, and we could make some minor prioritization adjustments to pay it. But, if you're running close to 150%, that becomes a problem. So unfortunately, we aren't going to have a government shutdown, and nothing is going to change, and we're going to kick the can, and we're going to deal with this problem when it becomes a crisis, because that's just how we roll over here. It's a shame, because this country truly is on the road to perdition as far as spending goes. And if that is not taken care of, we are going to be in a world of hurt. We have huge obligations. I've often said that the Depression era obligations that were put in as far as Social Security is going to wind up being the end of the country if it's not addressed. When that Social Security was created, and it will be, they'll do all kinds of things, but they're waiting to the last minute. Older people tend to be big voting blocks, and you don't win elections by telling people you're cutting their payments. It just don't work like that. Here's the issue. When Social Security was created, people didn't live that long. They died in their 60s or 70s. Now people are living into their 80s. And here's the kicker, because Social Security is a big, fat pyramid scheme. Makes Bernie Madoff look like a little piker, like the Sandlot. He's the JV compared to what has been pulled off by our government here. People are getting married later in life. They're having less children. The financial problems that have plagued the country since 2008 and 9 have pushed that trend even further. And you have a pyramid that isn't getting enough in the base to fulfill the top, meaning people are getting older, and it's a big generation, and we don't have enough to replenish it going forward. That, by the way, and I really don't want to get into this because this is now starting to teeter into more political views. I believe, though, and I'll say this, that is the reason why they want to be lighter on immigration policy, to make up for that deficit of not having fresh Americans. So they bring in foreigners to make up the difference. It's clever. It'll work for a little while. They tried this in Rome, and that led to the disaster that happened in Rome. A lot of parallels in the United States. There's the Romans, although the Romans didn't have nuclear weapons. If they did, we'd probably still be speaking Latin. That's just a historical fact. They started letting in other people from other nations. They polluted their armies with this, and they didn't have the same sense of nationalism. And then they got run on Germanic tribes, and they were buried under a mountain of debt. They were actually paying, believe it or not, paying off their enemies not to attack them. They were paying these tribes, and eventually it got too expensive, and they eventually sacked Rome, and then there was the fleeing to visit. Anyway, I don't want to get into this. This is a whole irrelevant story. If you guys are interested in a history lesson, maybe we'll do it over a cocktail one night going forward. Anyway, that's the story with the debt. I wanted to let you know that it is a media manufacturer and a politician manufactured crisis. It can very easily be dealt with, and there will be no default. The market will not like what is going into this, and it will potentially have some volatility, shall we say. Here's the caveat, though, and I saved this for last because I want this to go in. We had a bit of a game changer over the weekend with the hurricane in Texas, and this may push the debt ceiling. There might be a quicker extension. Meanwhile, there might be less of an appetite for political rancor going into that now because of the catastrophe. They're going to need funding, and it's going to be very hard to tell your fellow countrymen that you're, fighting over political gripes when people are drowning in water. So that's the scoop. My take on the hurricane, also very important. These are all macro factors, by the way, that we have to discuss, because remember, I talk about macro technicals, and then I talk about we talk macro technicals, and then other factors like market conditions. Usually, credit is what is the main thing I focus on, meaning can people borrow to sustain stocks. And we talk about movies and music, and we could also talk about Game of Thrones if you like at some point also. Anyhow, not to get too far off base here, but the hurricane short term is growth negative. We just had that new growth number out that said we were growing at 3% the last quarter, which was better than expected. I've been saying that growth is increasing. However, the hurricane is a growth negative short term. We're going to have to suffer through some junky numbers because from companies or so on and so forth that are affected by this. But longer term, that is going to be growth positive. Texas is a huge state, and it's going to have a huge build that's going to be for years and years. That's why you saw stocks like USG up big. They do the wallboard and so on and so forth. This will probably be a big boost for equipment rental companies like URI, Caterpillar, and so on and so forth. And particularly with this president, I can't even imagine foreign bidders getting contracts. So it's all going to be domestic, and I think it's going to be good for jobs, and it's going to be good for growth going forward. So short-term growth negative, intermediate to really more longer term, it's going to be growth positive, and this is going to go on for years. Let's get into the markets, shall we? I'm going to try and weave in some of the stocks you all want to talk about, but first we're going to talk a little bit about what I want to talk about, because I'm in charge here, to quote Alexander Haig. I want to show you something, and I'm pulling this up on the ES charts here. I don't know if you can see, but look where this breakdown took place from. This is where the cascade really took place from. Look where we got up to today and backed off. It was pretty close to 2460, and now we're getting a little bit of a liquidation break pullback. No surprise. This just ran up. This frankly, I believe, was all a lot of short covering. You had this gap down here in the futures. Let me zoom in now so you can all see. Let me zoom. You have this big gap down here in the futures, and this was on the North Korea situation. I didn't talk about that as a macro factor, but it is an important one. I don't believe that there is going to be war just yet, but I will tell you this: this little punk is looking for trouble, and he really may just find it at some point. You had this gap down. You had all of the overnight inventory here short. You undercut here minorly, and then there was a squeeze. And once you get back up over this high here, which was 24.34, you can see that's where this started pressing, right? All the shorts, everyone in here who was sold was wrong. I believe that this gap ran a lot of stop loss orders. It sucked in a ton of shorts, and then they just got their heads handed to them, and they got squeezed. Again, in the overnight here, you had to move up, and this was there was a press higher, a little bit of rebalance here in the overnight. You had a mixed session, but the squeeze continued. This was all done on fairly mild internals. You can see it never really got too crazy. We were still in the 1-to-1s positive in the NYSE and only 2.5 positive in the NASDAQ. AD lines weren't all that impressive, only 755. Ticks were sort of middling. You can see they picked up. They got a little bit better toward the end of the day, but this was, in my view, a lot of chop. Same thing in the NASDAQ. As far as the NASDAQ goes, someone's asking, just so I want to answer this question. Someone's asking, will you be able to see the charts? I can't do it at the same time. I don't have that software just yet for that. But what I can tell you is that if you are a paying subscriber on the monthly channel, you can watch the rebroadcast, which shows the charts. I know a lot of monthly subscribers just watch that, just as an FYI. But as far as this goes, it's not available at the moment. It may be at some point. NASDAQ got back also similarly close to some of the breakdown levels. These were key, and we just kind of chopped around there. There was a little bit of notable weakness in Apple today. I'll say this. I think a lot of people bought it early because they thought Warren Buffett was going to talk it up, but I have no idea where they would have gotten that crazy idea from. A big hedge fund manager coming on and talking his book. And then that, of course, was played up by the media as if that was a reason to buy the stock. I think if he would have came on and trash talked it, maybe that would have been something. So you have this gap up here. I've been very clear that it needs to be above 160 for the earnings. We had one time frame. This is a longer time frame, 1.618 fib extension, and you can see there was a healthy back off of that. We have maintained the 20-day moving average. Notice what here, when you broke the 20 is when the problem started. We have been holding the 20. Here was a look below and fail. As long as Apple holds the 20-day moving average on pullbacks, it is a buy the dip stock. If it loses the 20 MA, it is a GTFO stock, meaning get the frick out. And you can insert whatever frickin' expletive you frickin' like. As far as where we are targeting to the upside now, we have a 1.618. Holy cow. Are you guys still able to see me? My whole screen just went like on the live broadcast just went like haywire. If someone could just type in the chat. You can't see me. Oh, wow. Yeah, something happened on that broadcast. I don't know how to fix that either. That is not good. Let me try flipping the camera and then flipping it back. There we go. I got it back. Okay, I had to I flipped the camera and then flipped it back. So we're back here. The chart watchers are not involved with that here. Everyone can see now. It's fine. Okay. All righty. So check this out. Now we have this range. There was a larger range here. That was the one that played for this 1.618. But since it's tagged out now, we aren't going to be looking at that at the moment. However, if you look at that time frame, it's 2.618. It's up here, closer to the 179.69 level. So we may be revisiting that at a later point. For now, we're now looking at this range. This was the consolidation range before this breakout. This was a professional gap here. It took a little time and some chop, but it seems to be okay. Here we go. Now you're coming up. You've taken out the high. The 1.618 of that range is 165.45. I am expecting a little bit of responsive selling there, but it could eventually get its way up to the 170. You'd think, you break 160, the next 10 points maybe is up. Maybe it's just that simple. At some point, I'm expecting this gap to fill in Apple. I don't know how or why or when it'll happen. Maybe it'll happen on the release. It's supposed to be on September 12th, right? Which is around this period of time, which reminds me also that the day before September 12th is September 11th. There may be a little bit of market tentativeness of terror concerns. You're just always keep your calendar up. Always got to be thinking a bit like this, unfortunately. It's a very sick world we live in. Today's price action was a little bit weakness. The NASDAQ you saw was up all day, and Apple was only, at some points, was actually negative. I think it had just run a lot, and I was actually expecting this day to be a bit of an inside day. It wound up being up anyway. I think you could use this high here if you're very concerned. You don't really want to let Apple get too much below 162.51, at least 162 strike. If we were to get below there, it's possible we do get a 20 MA test, which I will say, repeat, is the 20 MA is a buy until it is not, if that makes sense. So that's my story with Apple. I think it can drift higher. I'm mindful that they tend to sell it on the event. So that's just sort of how it happens. You may even have to sell it a few days before the event, actually. That's sort of just how they roll with Apple. Amazon. All righty. I've been very clear that I thought we would get a channel low test in Amazon, and I've been saying like William Wallace in Braveheart, hold, and then we went right. We got the channel test right here. This was the low of day was 936.30. I'm going to delete that oval just for conversation speak. And then I had said that I saw that there was another setup for an additional long trade, and that would be over the 10 MA. Look where this gap down came stalled, the 10 MA. Look where all the problems have been at the 10 MA. And look where the 10 MA is, right at the down channel. You got a gap above, and it was a gap and go. Now you really need to hold this 965. That was the 427 earnings day, high of day. You're coming into the 100 MA and the 50. This is the more important one. You can see here, all the support here before Amazon's breakdown. Here was a bit of a look at below and fail, but you can see it was stalled here. This is the resistance. And it's also close to the range high. So I'd be looking to book profits into the 50 MA. First and foremost, we're right on the 20. If you lose the 20, you may, if you can't clear it, there may be some rollback. I wouldn't let at very most, more than half of today's bar roll back if you're in this and you have good trade location from the low. I would trail up stops. The best thing I could see happening tomorrow would be one of these like sort of inside doji days, and then like for a couple of days just consolidate here and then go. I don't know if it's going to work like that. This just may go as far as when there's fears of slowing growth, like we're maybe getting here with the remember I said the short-term growth negative with regard to the debt, not the debt ceiling. What am I talking about? With regard to the hurricane, that's why FANG is doing well. Also because of TLT. Notice this TLT has been very strong, right? It came up here right to the old high, the reference high. This is also trading very, very, very technically. Check this out. Yesterday, it came all the way up here to this high, backed off. Today, kind of held. It needs to hold this 127.37. Very, very important. You now have 2 days worth of reference lows. If you lose those lows, there could be a quick short pull back to the channel. This day is a pretty big reversal day, and if you lost the 2-day low, I think there is a right or right out short below the 2-day low. At some point, I think everyone is expecting this gap to fill. It would have been great if it just kind of did it straight up off the bottom, and then it was the channel highs. Like it would be an amazing right or right out short. So it looks like we're going to get to wait another day. Maybe this just consolidates a little bit of, by time than by price. And this was still from the weekend review, at the $4.63, but you can now tack on about another dollar or so. So it was about almost a 6-point rally. If you took this full extension here of the 8, it was roughly up to here. So that was the measured move. Actually, I did a geometric measured move of all of them, and it was roughly up there too. So I am expecting that at some point. I just can't tell you exactly when. Let me not repeat everything from the weekend review. I'm going to jump around a little here as I see fit. Oil, not behaving particularly well. It needs, see the 50 MA here was the resistance. It was the support. You now have 2 days below it. I would put a buy stop in for a long above 96, 97. I needed to see this thing above the 47 basically for it to be bullish. can just buy stop it over here. This to me would be pattern failure, and it would probably have a very violent move back to the upside. But if it can't hold here, we're making lower highs and lower lows. We may want to retest 44s. Very possible. So just keep that in mind. Transports. This is very key to the market. I almost can't stress how key. This is kind of what led the rally. We're right on the downtrend here, and you can see the 50 MA has been resistance. So if you're looking for a right or right out short, it's really got to be right here and not let it get really much above the 50 MA. If it starts closing above the 50 and above the downtrend, it's probably then going to be a long. So this 50 MA here is the key. I'm also looking at this CSX. This is one I've played both sides. This also stopped right on the trend, and you have a 50 and 100-day moving average confluence up here, which could be a good right or right out short. And then if it were to break above, you would not want to be short. If you get above today's high, I think there is a right or right out trade for that, for at least a day trade. Below today's low, I think is a short that will come lower. I, for a while, thought CSX would go lower. I sometimes forget how stubborn of a stock it is. As far as growth goes, this is where copper really broke down from. Look, this thing just came up like kind of gangbusters. I do think there's going to be some type of retracement in copper, but I still think that it's a sign that growth is positive. So I wouldn't necessarily be chasing long here. There is likely going to be a pull. I mean, look how far away we are from the 50 MA. It's still at the old breakout point at 2.823. Someone asked, can I mean what right or right out means in terms? Sure, I can do that, and I'm going to use Amazon as my example. The right or right out trade was to buy it right on the trend line, for example, and then if it were to not hold the trend line by, I don't know, a couple of points maybe, then you're out. Or you can often wait if you didn't want to. If you didn't buy it right on the trend, you could wait to see a hammer reversal, and then buy it up over that like 5 or 15-minute bar, and then you use that low as your stop. So it means right, literally right, meaning you're right in the trade, as in it goes up right away, or you're right out when there's failure. So that's my my example. Obviously, for a stock like Amazon or Priceline, you don't want to give it 10 cents. You might want to give it a buck or two. So that's my that's the story. Why do the transports lead? Because that's the economy, how things are shipped, for example. FedEx, the airways, it's a sign of economic health. It's a little bit of an outdated theory. It goes back to the days of old when transports were a little bit more key to the economy, but it's still really rather important. Let's talk about the major market indices first. First and foremost, my analysis last week on SPY, I would say, was master's level work, if I do say so myself. Take a look at SPY here. I want to discuss the intricacies of, hold on, we got to block someone. Block. Love when I get these porno people in here. They're my second favorite next to the haters. All right, so here's SPY. We're above the downtrend. We're above the 5th MA. Yesterday we had a smidgen close above it, and today we closed above the 20 MA. These were very key moving averages, right? Particularly the 20 is resistance. So that is now the key support. And I am cool with the market long as we hold the 20 MA. If it loses the 20 MA, there will be rollback. You could see today's high, and we didn't close above it, was right to the 61.8, 246.21. Remember what I said in my weekend video, and what I've been saying on the Twitter stream, and what I've been saying for a while, that first and foremost, let me zoom back a little bit. First and foremost, for the bulls to start neutralizing the market, they needed to close above 245.01. Yesterday's close was close. It was 244.85. The high of day was 245.15. So any move above today's high was, of course, a long. because you were back into that gauge. This day here, and I cannot stress to you enough how important price action is. This was the gap down day, remember, on the North Korea news? Look where it stopped, basically right to the gap fill. And it was they just bought it up all day. So remember, this was the range that we were playing against, right? We want to be either short below or long above. This is now a look below and fail. You closed really high back into range, and now you're above it. So anything above 245.62, and I'm willing to give it a little bit of wiggle room to 245.37. As long as that holds, the market is still good. I mean, potentially for more upside. If we were to clear today's high of day, my first target here would be the gap fill. This isn't a true gap, though. Why? Because this bar does have price action in this range. This is a true gap. You see where this bar was, the 811? This is because it's completely gapped out of range. That's a true gap. So I'm thinking that if you can get back above, I mean, if there's strength tomorrow, we may come up to fill up that gap to 246.94. And then that would be, in my view, a move to the top of range, and we'd have come up from the bottom, and there could be some potential rollback. I've said for a while, and for some reason I deleted it. I had this is buy 'em ugly, sell 'em pretty market. That's what this was, all these 100% retracements. Does this look familiar? What we're in now? This is this again. I believe that we're in this again. This, like, could tomorrow be a complete move down and then the next day back up? Very possible. We are in a highly technically driven market run by algorithms and day traders. You know that when technicals to like the tick gap fill, for example, or within like a couple of cents are respected. Frenetic trade, meaning initiative trade, like when things get really out of control, when everyone's just slam the button or slam whatever, that that isn't when it's only day traders. You have multiple time frames in all hitting it at once. So that's the story. We've now broken the downtrend, and we are above the 245.01, and we're above this breakout bar. So things are improving, but they need to stay improving, if that makes sense. So this would be my kind of upper here. This range here would be my upper target. If tomorrow's weak, we're going to probably pull back a bit. Could retest early the 245.62 to 245.37. It's still hunky-dory as long as that holds. If it does not hold, then it's a problem. Just keep it that simple. And if we lost today's low, for example, and got, this was a look above and fail the trend, and we're now below, this is going to get ugly fast because, look, the 50 MA is right there and so on and so forth. So today's range is key. It's okay if there's a pullback as long as roughly half of it holds. Above it is bullish, below it is not. IWM. Let's see. Remember I said that take a look at this money flow. You have this downward trend. Look what we're right up against here. There's a potential for a breakout here in money flow, meaning new money buyers are initiating. As of now, it's just a trend touch. But keep in mind, if this doesn't back off, that could be a good sign. And what did I mention here in the weekend video was a potential inverse head and shoulders setting up. We had a roughly measured move down, and now we're back up. We're back up above the trend here. So what's the key in my view? This 200 MA. Today's low of day was basically there. It needs to hold. If you look, we're starting to get back into the breakout area. This is a breakout. I kind of sectioned this off. 138.17 to 138.73 is a breakout low, breakout high. You'll sometimes see that when there's a little bit of a band. And this you can see is a very choppy instrument. We are, though, breaking the downtrend a little bit. If that move does continue up, obviously the 100 MA and potentially the 50 MA will be points of interest. And you can see the 50 MA is very close to the gap fill. That would be an interesting area to either book some profits or potentially a row intraday short. And if it really works, you can carry it over. I want to show you what I'm thinking also. Look where this gap fill is close to, the 61.8 of the range. So roughly around 140.38, if assuming I drew this in properly, which it looks like I have. The halfback is roughly the 50%, which is 139.19, is close to the 100 MA. So somewhere in here, you'd be looking to probably book some profits. This is a key area. I'd probably book some here, and then trail up the stop, and then maybe look for it to land somewhere between the 50 MA and the 1.6. I mean the 61.8% fib retracement, and this really should be red because it's the way back up. Green on the way down, red on the way up, meaning you'd be looking to buy it or looking to short it on the way up. So this area to me would be a high probability right or right out short if we were to like come up from the bottom. You see what I'm saying? So that's IWM. By the way, someone just asked about tax reform. This instrument, IWM, will be the big beneficiary of tax cuts. So if you start seeing this rip, or the more tax cuts seem likely, the more this should rally. That's my take on it. The Qs. Should have talked about this probably when we were talking about Apple. A couple of interesting things to note here. What do we have here? We have a downtrend break. We're above the 20 MA. Look, this was the resistance. Now we're above it. Very key. This is close to a top of range, though. So you need to stay above it. And if you can continue above today's high, it probably will float up to the old high. If you start getting breaking down below, where do we want to stay above? This big emotional candle, the range-defining candle from 6.9, 143.90. And look where that just happens to conveniently be halfway of today's range. Very simple, very visual, and look where this kind of breakdown took place from. Look at this bar here on 8/17. What was the high of day that day? 94, right? 143.94. I mean, just a little bit above. So this is the area. And look what happened when it failed and you got low. That's when it got fugly, right? So this area needs to hold 143.90. That's the maximum pullback I'd really be comfortable with in terms of the Qs. See how easy it is when you follow me and just watch? It just all clicks and makes sense, right? Let me do some of the other biggies that we didn't get to cover in the weekend video, which I had been planning on discussing. This is a big look above and fail in this Autodesk. It came down here, we held the 20, and now it's bouncing again. Now the key, this would be very interesting to me. I'm not really so interested in this long right here. It hasn't pulled down enough, and I don't love that this kind of got sold. I will say this, though. If this were to come up and price starts really accepting in here, particularly above 114.68, this could really start running again. What I would be a little bit more interested in, though, if this were to roll over then again and lose the 20 MA, maybe a right or right out short there. And then we have to see if we're able to hold the 50 MA. You can see there's a little noise below it, but that's been really the key moving average. If it weren't able to hold there, then I'd be interested in hitting the gas for further, maybe to the 100 or maybe even to this trend line. This trend line and these lows, this gap fill or whatever, this area, that to me would be an interesting area for me to buy the dip. Like if it were to just come straight down, that would be a little bit more interesting to me. AVGO. Check out this AVGO. Drew in fibs from two different reference lows, and I have the channel in here. You can see it spent a little time above here, but I use this connecting point. You can see here it broke below. Here was a perfect test. That's also why I like this, because I always look to see where it can. So you have reference lows here and a trend and a channel. So if it can hold this, and you can see we're right on the 50 here, right below it, then it could be okay. If it starts accepting into the channel, and you have this, I would assume that you can see this reference low. So like if there was a 100 MA break here, I'd probably play short for the range low, and if you continued lower, maybe it gets, who knows, even to the channel low. That would, believe it or not, wouldn't even be that crazy bearish. It would just be a retest of these lows and this breakout point. It's also a mini volume distribution. So that's my take on this. This to me, these are poor highs. No wonder there was a liquidation break. If you can get back above the old all-time high here, like if this were to come back up, I'll say this: if it just came straight up, it might have a little bit of struggling time because you're coming up from the bottom. But if it were to do like one of these, like just grind and like chop for a while, then it's go time over these highs. And who knows? I mean, it's open air. This thing could really get parabolic, which, believe it or not, I actually think it could do. So just keep that in mind. Above the highs, I'd be cool with a red or right out long. And at the very least now, look, you have very similar looking pattern here. So if there's a gap or if there's a move over the 50, it probably could run a little bit more. So I guess I would say I like it long above the 50 and maybe flat, or if you want to try short below the 50. ATVI, that's this Activision. This is Activision Blizzard. These are all very similar charts. This is a pretty bullish pattern here. It's actually a bit of a kicker pattern. You can see though that the channel has been the buy the dip. Listen, we're in a bit of a weird market here. I'm not as big in favor of chasing like one-day breakouts. And you can see, I want to just caution you. Nobody else talks about stuff like this. That's why you watch me. But look, we have a progression. This is a regression line here. This was the support until it broke. Now, look at this. It's been resistance every time, and now we're above it again. So while everyone's sort of like excited about the breakout, I'm a little bit concerned because of the progression line, which is right here. So just keep that in mind as this keeps going higher. It could keep going and just keep trailing up stops. As long as this is above this high, though, this bar is high, this 64.29 was this high of day here. As long as it stays above that, and that's a little bit more than halfway of today's bar, it's all right. If we lose today's low tomorrow, 63.38, it's a pile in short, because this whole day would have been a look above and fail, and I think you'd come down to the 50 MA with the quickness. So those are right or right out entry points for this. I'm dabbling a little in this Diebold, the CEO, or not, there was some inside buying here. 1995 was the breakdown. I like that this came up here and was just sputtering around. I'll probably try to hold this as long as it holds the 10 MA. If it loses it, it'll just be GTFO. I had drawn in here actually when I had bought the breakout that 1890 was the must hold. So I mean, I guess I maybe would give it a little bit of room down there, but I don't know. I'd probably, believe it or not, maybe would use could use today's low, or I'll use the 10-day. That's going to be my key. I set the 10-day. See, this was kind of where it started getting problematic from. So in my view, if the 10-day can hold, it's okay. My move, I'd be playing, look, for the 50 MA. Look where that was all the resistance here. See? And so the 50 MA would be my max upside target. That's the Diebold. Someone asked me to talk about YELP, and I like to take requests on occasion. This was apparently an old gap fill level. All right, so I have a couple of positives and negatives about the YELP. So my concern with YELP is that we've come up from the bottom, right? I do like that this has spent some consolidation time here to work off a little bit of that excess. You can see this 100 MA was a key moving average, and we're really far below it. I would love if this would have caught up a little here, but I think it looks okay. I mean, I guess if you're long, you would use 40.70 maybe as your stop. That would be below the 20 and below this consolidation shelf. And you could even try right or right out short if it were to lose that. So if there's some kind of pullback, it would still be a buy as long as that holds. But if you start losing that, it could start coming back, in and maybe filling up some of this gap. I do like this, though. This is actually, I often talk about a golden cross light. We actually have an actual golden cross, and it just happened now. Let me draw in that as a text note. I don't really think the Golden Cross matters all that much. I was more of a Golden Axe fan, though, believe it or not, from back in my Genesis days. But as far as Golden Crosses go, the 50 now crossed through the 200, so that's usually pretty good. Actually, another example of a Golden Cross, and this is one I had been talking about and was very bullish on, actually, was Gilead. However, this now into I don't want to say a problematic level, but a problematic level. Look where the reference lows were here. This was the breakout. This was the old breakout from back in the day, and then it kind of became support, and then this was really the area. Look at this. It broke down, it retested again, and then came down. We are right back there, and we come up from the bottom pretty badly. So I would say that I mean, look, the full gap fill is up to 88.55. Very possible that this just takes on a life of its own, but I would expect there to be a little bit of reference memory. You can see we're also in a channel, and we're through the channel high. So I'd be looking, and you can see I did some moves up, measured moves up. We're kind of a little past there. So I would be looking to book a little bit of profits in Gilead into the move up. But I do think Gilead is now back. This is a really nice rounded bottom. I love that this had this big press up here, another leg, and we're making, look, higher highs and higher lows. I mean, that's stocks we buy, right? Stocks that make higher highs off higher lows are good. I love their CAR-T entrance here. You can see, by the way, the 100 MA was, again, a very big moving average, and we've spent it's now turning. This was, look at this, a gap and a go above it. Any retest, by the way, I don't know when it's going to happen. It may happen somewhere here. Any retest of the 100 MA on weakness is an absolute major buy the dip opportunity. So just keep that in the back of your head. If you've missed Gilead, I actually was long before the announcement, and as crazy as this sounds, I always say you kind of have to know when to break the rules and when to follow the rules, and what the rules are. So this day was very I don't know how to say, but it was I knew the stock should be higher. I knew, listen, everybody was waiting for Gilead to use their balance sheet to buy something, and I thought Kite was a good buy for them, actually. And I was really surprised this day, and I had bought it up, and I originally, believe it or not, I almost bought it right off the open. It was pretty nuts, because I expected this to happen yesterday, and it didn't. And I was a little nervous, but I said to myself, if this closes well, and it closed near the high of the day, I said I'm going to give it a little bit more room. And today was really very well rewarded for that. So I don't really want to let this get back too much below the channel. So just keep trailing your stop. I wouldn't let this really get much below 80, let's just say, at this point. The ideal scenario, though, believe it or not, and long's never like this, but the ideal would be like a few days down, or just sideways. Like if you had those 3 days down and then the big other candle further up, that would be in my view, the ideal situation. I think that this ran a ton today. It'll probably be up again at least a little bit tomorrow at some point, but I do like the idea of booking it into a little bit of strength and then kind of reloading on dips. Kind of trade around it. I don't know that you have to be fully out, but if you've added to the position, trade around it a little bit. Let me see what else we wanted to talk about and what I've covered already and what I haven't covered. We covered Autodesk, covered Amazon, we covered Gilead just now. By the way, how is IBB and all that jazz doing? I want to just point something out. Notice how this topped up here with the Head and Shoulders. This could be doing the same. However, look at this. You're right up on the trend, and this is getting the right shoulder is a little higher than the left. Those are harder to get the right-hand translations out of. So I would be a little cautious first chasing here, but if you can eclipse the head like the 329.90, this could go a lot higher. So just keep that in mind. Bears really need it to stall right here. The XBI that's the other one, right? The biotech, same looking kind of pattern. But look, again, this is now like up to the head, right? I mean, this is up to the head. So this was already and above the channel. So this is already basically pattern failure. This is a bear pattern that is looking like it's turning into a bullish pattern. So just keep that in mind. Other momentum. Now let's just go right through the list here. NVIDIA. I'm just going to go right through this list, and then we're going to wrap it up. How does that sound? We're right on the backside of the channel here. As long as the 50 MA holds, and I said this in the weekend video, I think it's all right. If you can get above this day's high of day, though, this 168.55 again, I think it's going to go. I mean, if it can clear that. And let me update my fib levels because they're not updated. That's a bit of a problem. A little bit, though. All right. So this day is very key. This is a look below and fail, actually, right here. So when you have a look below and fail, this was a look above and fail, and now a look below and fail on a gap fill. This should theoretically go up. NVIDIA should quote unquote should go higher. So any break of this intermediate downtrend should go higher. And I'd be looking to add there, particularly if you get over this. This should have been a secure high, which it turned out to be. You're through it. You came down. Now kind of back into that range, right? So, I mean, as long as this kind of can hold, as long as the 50 MA holds, I'm fine with it long. If it gets below it, it gets a little bit more iffy, as I like to say. Tesla. I've mentioned that this is kind of in a triangular pattern. As long as this holds 348 to 350, it's all right. A break of this downtrend here off of higher lows would be a little bit more bullish than not. So just keep an eye on that. You have some reference lows here. 50 MA. What else? You have 100 MA. This is still okay as long as the 100 MA holds. That held here, held here, held here. I wouldn't suggest really shorting this until you lose the 100 MA. If you did, then yeah, be my guest. Gold. Potential secure high from yesterday's reversal par. Again, this came up from the bottom, right? Remember I said this a couple of weeks ago in my video that we were actually looking for almost exactly this. That I thought we'd run the highs, but I thought that it would find sellers because it came up from the bottom. We did spend some consolidation time here, though. So it's not like this was just a complete straight shot, but it does not shock me that there were some buyers here. This needs to get above 124.73 and accept price into this bar more. If you lose the 2-day low, I think it's going to come back down, retest the breakout, and maybe even like this 20 MA. I actually, in real time, it's always about the real time. I've been making some pretty good real-time calls lately, right? A couple days ago, we nailed the high in Apple. It gapped down $2, opportunity to rebuy. And then yesterday, at basically the high of day, this was actually trading this nugget or whatever the F it, was above 40.25 when I said that it was time to book some profits and trail up stops. And it wound up being basically the high of day. And it came down, and then today was weak, accepting into the spike. For this nugget to get bullish again, where does it need to get back over? 38.94, right? Those were these highs. Where would I look? But look where that's stalled on, the 100 MA. If this were to have some kind of steep pullback here to the 100 MA, and look here, again, it was resistance. That would be the support to me. I would be interested in buying Nugget here back down at the 100 MA. If it were to, particularly if it gets there steep and fast, which people always get freaked out about, but not I. AMGN, one I don't talk about very often. This is just a very choppy pattern. This is a lower high here. The 100 MA, yeah, let's see. Let's zoom in. You're right above the 50, with the 100 being support below. I'm not such a huge fan of this pattern, really bullish or bearish. This looks very, very choppy to me. I'll redraw in the trend line, and I'll say this: if you're long, just use the trend as your stop, or if you're looking for a short, a violation of the trend would be your entry here, right? 52.16. Let me. So I'll tell you, sometimes there are just patterns. Overall, I'm a big fan of this company, but it's the stock here is a little. I mean, it looks, I guess, more bullish than bearish to my eye. I wouldn't. Yeah, actually, you know what? 170.53. Long. I'm cool with being long as long as you're above that. Below it, I would try short. So that's the key in my view. That level. GOGO, not one I look at or even think about very often. These guys do the Wi-Fi on the plane, I think. Looks like the pattern's trying to improve a bit. Let me look a little bit further out. What, 4-year daily? Wow, this thing is what an ugly chart this used to be. If we do a fib from the last peak, so glad today is a little bit more civil, other than the people who were trying to porn it out before. Let's see. What was the high here? 23.20. Yeah, all right, we'll use that. Hold on. Doing this on the fly. People seem to like when I do these on the fly, right? It gets them like all excited. You're right on the 38.2, and this was really the breakdown point. I like that you're at it again, right? Now this is like for the third time. So you have the 50 and 100 MA that have been the support, right? The confluence. This looks all right to me, I guess. I don't know if I'd be chasing it, but I would probably buy dips in this. I think the pattern looks like it's improving. I guess those are famous last word. Wait, actually, we have a better reference range here. Here we go. This is what we needed to see. They had an earnings day, high of day, which was 1290. As long as the pullbacks hold that kind of area, I guess 20 MA. As long as this holds at 20 MA, it's all right. Below it, get out. Above, okay. Look here. This is when this broke down. It was from the 20 MA, and this has been the support. So the 20 MA, in my view, with GOGO is all right. As long as you want to as long as that 20 MA holds. Workday, I've seen a few people ask about that. Did they report? I think they may have reported. This looks like it ran a little bit into the number too, and it was into some reference resistance. I probably would have been selling this before the earnings. How did they do? Let's see. 1 day, 5 minute. It looks like a pop and flop and now flat. In the after hours, the 100 MA 15 minute is, sorry, the 1 day 100 MA 5 minute has been the kind of the support. So if you're long, you could use that as your stop. Below that, I would not want to be so long. What were their numbers? Did they do a good job? Oh, they kind of crushed the number. I'm surprised it's not higher. You need to clear this high of day, the 111.50, to really run. And if you want to be a bear, you got to lose the low of the spasm bar, right? The 105. So very simple. Wait until one of those directions break, and then I guess go with it. What was the 4-year daily? This was actually, remember, I did a thing when I did the examples of exhaustion gaps. This was an exhaustion gap, right? And the high there was 116. I think the upside, look, this came up all the way. I mean, maybe it makes a new high, but my guess is that this is getting close to the highs. So there's probably going to be sellers as you get up into there. So I'd probably be looking to book profits on rallies. Palo Alto Networks. Let's see. This had lost this trend. Now it's above it. Let's zoom in, zoom. Zoom. I like this actually here. Today was a trend break, a trend line break, and it was right off the 200 MA. So today's low of day is your stop. I don't love that we're not above the 50. Yeah, I'm guessing you'll see the 50, right? How big was today's range? This is an expensive stock. Not too bad, a couple of bucks. Today's low of day would be your stop if you're long, in my view. This held the 100. Holding 100 should see 50s. So I'm thinking we see the, let's see how it handles the 50. You really need to see it accept price back into this earnings gap bar. So if you can maintain 133, where did we stop today? 132.85. This needs to get back up above 130, except into this bar. This is a very choppy pattern, but I like that it broke the trend. And if you're long, just use today's low of day as a stop. I'll leave it at that. Netflix, one I like. How did it do today? I didn't even check out Netflix today. Oh, PAN earnings tomorrow. Oh, let me go back to it. Yeah, you're right. It is earnings tomorrow. The last gap, the prior gap was down. This gap, the last gap was up. Let's see. So this was down, then down again. So you had two down and then one up. So maybe you get another up, right? That's what I would be thinking. I don't love that this is rallying ahead of the number. That's a little disturbing. See, I would have liked this to have come down and filled the gap, actually filled the gap for earnings, but you're now back up above it. You kind of had like two look belows and fails. It looks all right. I mean, it looks all right. I don't really I don't follow this company that often, so I don't know if I'd be gambling on the earnings. But I will say this, if the move is up, I think this time it will have legs to go a little higher. So I think that you could probably play this in the after hours, wait for that like earnings, the initial bar. And then once that would clear, I would probably be interested in the long. And if you lost the 100 MA, I'd probably be short. So that would be my story with the Palo Alto. But again, I don't really have a feeling for that earnings. It looks like it should be an up move though, which probably means it'll be down. Netflix, breaking trend also above the 20 MA. That's the key. It's got to be above the 20 MA. That was the breakdown point. So if there's any pullback tomorrow early, you could buy it as long as the 20 MA holds. Is today's gap in Netflix a professional gap? It has that look and feel. It really does. Yesterday, though, did close above the trend. So yesterday really was the day to have bought this. And then today is the continuation. It's back up above the channel, 20 MA. That's, look, where all the trouble has happened. Look here, this is where the 20 MA broke down. Here was the resistance. Here was where it broke out of. Here was where it broke down from. 20 MA, it's got to hold the 20. Below it, it's a GTFO or a right out short or whatever you want. Above it, it's long. I think that this is probably going to come up a little bit more, maybe down to this low here, this 179.38. That looks like it would be near the gap fill and where the real breakdown kind of happened. Longer term, I think this stock could let's see how the money flow is too, right? Double bottom and increasing. Was this a higher low? A little bit, right? You're making, yeah, this is starting to look better. As long as the 20 MA holds, I'm cool with Netflix. Below it is a bit of a problem. Someone asked, and I'll end on Bitcoin. Someone asked about that, GBTC. That's that trust. By the way, this thing trades crazy expensive to the actual Bitcoin. This looks like where we're gunning for, the 1,071.43. That's the 2.618 fib extension, this entire range. Up here, I'd be looking to bail you. Unfortunately, you can't short this thing. I've tried. It just boots back the order, but you can play it long. Pullbacks to the breakout. You have two breakouts here, one 565 and then here at 778. This has been prone to big pullbacks before. I was actually sort of hoping we were going to get one off of like a poor high here, but it just continued, so it worked out. Yeah, up here would be the point. I would not let this, if you're long, get back below 878. That was the 2 times range. This the 1.618. It had some stuttering there. It may consolidate a little here, but it's looking like it wants a little bit more. Anyhow, that's my story. I'm sticking to it. I hope you liked the video. Wow, we went pretty late in this, but that's okay. If the version of this with charts will be on my subscription site soon. If you're not subscribed, I highly suggest doing that. It's the link to that is right in my Twitter profile at Justin Pulitzer. I'm maybe raising the price soon. If you subscribe, you'll get to keep the current price, which is $49.99. I may up it to $59.99. I've been debating. We'll see. It's not really so much about the money for me. It never really has been, but it seems to be the competitive price. So we'll see. Anyhow, if you're not subscribed, I suggest doing it, and you will get to keep the cheaper price. Have a great rest of your week. I will see you on Sunday. And, how many subscribers? A lot, very much. I don't like to discuss proprietary levels, but we are doing really well, actually, a little bit more than I had thought even at this point. So that's good. Anyhow, have a great week, and we'll see you Sunday. Cheers.